Is it time to start shorting NVIDIA stock? That's a really good question. And I'm sure the market is curious at this time. Can the stock continue to deliver? Can the earnings, can the revenue continue to grow? But if that happens, just how much will the market cap continue to grow by? It has to make sense for the market. Current market cap is 3.11 trillion. That's as crazy as it gets. Looking at the revenue is very different. It's a very different story because from Q1 2024, data center is generating 2.25 billion, gaming is generating 2.65 billion, professional visualization, automotive is 329 million. So data center seem to be where they're really selling to. And data is becoming a more important thing gradually. So it makes sense that this part of their business continues to grow, but by how much? If this company has a market cap similar to that of Apple, can it generate Apple's level of return in free cash flow, revenue? How about the consistency? NVIDIA is a well-run machine. It's doing incredibly well right now. But honestly, how long will that last for? The incredible thing is that this company has incredibly low expenses. Looking at capital expenditure, 369 million. Looking at the R&D, that's 2.7 billion. Incredibly low. That's compared to the revenue by segment, of course. So for a lot of people, this might be a good time to short NVIDIA. Now, this is not financial advice. It's just my own opinion. But I saw some articles that got me interested in this idea. NVIDIA stock. The short sellers are just asking for trouble. NVIDIA stock is reportedly a heavily shorted stock. No surprise here. Furthermore, NVIDIA shares could continue to gain value due to strong demands for the company's Blackwell processors. Now here's where it makes more sense. 25th of June, Reuters reported NVIDIA shorter sell makes 5 billion from 3-day sell-off, data shows. The stock slumped 13% and lost 430 billion in market capitalization since June 18. Now this article is a little bit old, but the reason I'm going for it is because the amount of money that short sellers earned. The most important thing is that this company, it doesn't need to fold by 60%, 50%. A simple 10% will do. A simple 20% would do. So will NVIDIA continue to be volatile? Perhaps. This market will continue to grow, but there will reach a time when that growth will become quite limited. The thing is that NVIDIA is the obvious company right now to shop with. If you own a data center and you want specific computing power, that NVIDIA are best in providing. But could the competition heat up from Intel, AMD? Now there's other competitors out there who want a part of this market. So for the foreseeable future, short sellers, they might continue to make some money due to the volatility of this stock. In the meantime, Intel, AMD, they will try to catch up to NVIDIA. So NVIDIA has a lot of things going for it, but it also has a lot of things working against it. Not to say it's a bad company, it's a great company to invest in if the price is right. But right now, that doesn't make a lot of sense for a lot of investors. So naturally, people are going to take the opportunity to short it. It's probably one of the best stocks to short. It's just my opinion. But if it proves to continue to be volatile, it's going to become quite obvious to everyone that this is actually a great company to short. Instead of shorting Apple, Apple is quite a bit more strong, despite the high market cap. Instead of shorting Tesla, NVIDIA actually becomes a new stock on the market that's just crazy, with overvalue. This used to be Tesla. A couple of years ago, 2-3 years ago, this used to be Tesla, where Tesla valuation was, close to $1 billion. However, the revenue was very different in reality. The revenue was a lot less. Even revenue annually was a lot less. It didn't make any sense. People were saying Tesla is overvalued. And since then, Tesla has lost a lot of its value, more than half. Now, lately, Tesla has been going back up in valuation, admittedly. But there was a time when Tesla was overvalued because of the crazy demand of the EV world. But quickly, the EV world responded. There became a lot more competition almost overnight. And that created the price war of electric vehicles that we know today, where companies are lowering the cost of their electric vehicles at crazy prices just to continue selling these vehicles. But also because the consumer market has not fully adopted to electric cars fully yet. They're still buying petrol cars. So could NVIDIA be in a similar situation to where Tesla was? only a few years ago, where Tesla was seeing an incredible amount of demand and they were building new factories. They were just selling, selling, selling. The stock was going up through the roof. Everything was going into their favor until more competition, until we realized that actually the demand for EVs are not as sustainable as we once thought. Yes, for sure, NVIDIA could be going through a similar situation. We might actually find out in a few years that perhaps this kind of business is not as sustainable as we once thought. But because it's perfect timing for NVIDIA to capitalize on the market that desperately needs their technology, yes, they're doing incredibly well right now, but will they continue to do this well? I'd love to buy the NVIDIA stock. I would love to buy the NVIDIA stock. This company is capable of making 25 billion in Q1 of this year. Let's assume that they can make 100 billion this year. Even at that, the valuation of 3.1 trillion is still way out of proportion. But this is a year's difference that it makes with NVIDIA. Last year, Q1 of 2023, things seems like a different world last year in Q1. Literally, the amount of money that they made in Q1, anywhere from 7 to 8 billion. Now they're pulling in 25 billion plus in Q1. Yeah, that's a huge amount of difference. If they can sustain this, great. But what's a good price to buy NVIDIA at? Seriously. If this company was valued at $1 trillion, would it be more attractive? Certainly. That would be very nice to buy NVIDIA at that price. But let's admit that's not going to happen. If NVIDIA was 2 trillion in market cap, again, that's where it starts to get into the slightly overpriced territory. Because the big question is still, can they sustain this? Is it really sustainable? NVIDIA has a great chance of being very well sustainable. In fact, it's a great business. It is a great business doing great things. The only problem is it's overvalued. So for you as an investor, if you invest right now, you're not really getting the best value for your money, because overvalued companies, they're a lot more difficult to run, especially in a market where it's unpredictable, similar to that of the EV market. And let's just look at how much money they made last year. This is annually. From data center, 47 billion. From gaming, over 10 billion. From professional visualization, 1.55 billion. Automotive, 1 billion. What's that, like around 60 billion or 58 billion? Okay, so, they're not too far off from making 200 billion. This company could make 200 billion on an annually basis, sustainable, in the next 2 years, 1 to 2 years. They could, but even at that, it's probably still overvalued. And let's be honest, the dividends, it's not much, is it? It's not much. And due to the stock split, the dividends actually went down due to the stock split. It went down per share because the share prices are so much different now. So yes, I'll definitely say the company is one to keep an eye on. Now I'm going to introduce something a little bit new to the channel. Wildcards. Stocks, wildcards. NVIDIA is one of my wildcards, for sure. It's not an obvious wildcard. It's quite fairly understandable why this is a wild card. Because of its valuation, meets with the revenue. Yeah, I definitely see this company being a wild card because it's unpredictable. But the growth has been nothing short of exceptional. Looking back from June, July 2019, $4 per share. Yeah, that was good times. Polestar is another wild card for me. The company is crazy undervalued. It's crazy undervalued. But due to the company being so closely connected with China, it's not getting the respect it deserves from the global market. So Polestar has a lot to prove. Good news is that the vehicles are great. So if they can continue to sell vehicles, which is looking very much likely, because there's a huge amount of demand for their Polestar 3, Polestar 4, not to mention the Polestar 5 and 6. The good thing about this stock is that it's incredibly cheap. That's the good thing. It's, in fact, too cheap. But you'll never hear me complaining about a stock that's too cheap. I'm just pointing out the obvious. But those are some of my wild cards. Stocks that you have to be a bit more conscious about investing in. People bought at the IPO price of $13 per share, which seems crazy. I remember when Rivian came out, I would have never bought at the IPO price. I said, listen, gotta wait until Rivian is around $10 per share, $12 per share, at least $15 per share. With Polestar, I just think that a lot of investors just invested too quickly into Polestar. They didn't wait until the hype died down. They just invested into an IPO. And does that ever work out? Short term? Long term? Yeah, I'm confident that Polestar stock can be $25 long term, $30, $40, maybe even $50, maybe even more. But short term is a bit more risky. Now, looking at companies that are more fair value, I'm looking at Meta. Meta, very much a fair value company. When you look at the market cap, when you look at the price for this company, some of this data is incorrect because this was actually meant for NVIDIA. So I need to change a lot of this data. It's not actually correct. But the Netflix data is correct. And Netflix is on my list of fair value company. In fact, I think Netflix is a very, very fair value company because just think how much this company is going to continue to grow versus the cost of this company. It's either fair value or cheap. The reason why Netflix seems expensive is because the stock price is high. So what Netflix is experiencing is actually they just need to split their stock, if I'm being completely honest with you. They just need to split their stock. If they did that, they would seem a lot more attractive, similar to what NVIDIA's done. So Netflix, without a doubt, is a very promising brand, of course, very promising company. And at 282 billion in market cap, it's probably fair value or cheap. It's probably considered cheap because of the value they will create over a long-term period of time. When you think about Netflix, you got to think long term. Even from Q1, they continue to grow. They continue to grow. If you look annually, how much money this company is making, this is based on region. Almost 35 billion last year in revenue, and they will only continue to climb in this. It being an entertainment business, the business model is well diverse. The business model is kind of perfect. Netflix is cheap, perhaps undervalued. But I'm going to close out the video right here. Thank you for watching. Subscribe to see more. Leave a like, leave a comment, and I will see you in our next video. Peace.